Well, hello everyone. It is so good to see you. My name is Mike the CPA, and if you're coming to check out this video, then you're probably wanting to learn more about estimated tax payments. In fact, you might be looking for a method of how to go about figuring out what to pay in terms of estimates. And that is what this video is designed to help you with. So stay tuned because you've come to the right place. Fair warning guys, before we get started, even though I'm going to try to keep this video as short as I possibly can and explain it enough to help you understand it, this video is going to go long. And so that's why I'm including timestamps down below. And just feel free to jump around to any point in the video. Give yourself time to self-study this stuff because I think that's really going to help you more than anything else. Rewatch this video and then take that information or this information and apply it to your current situation. So if you want to grab a drink, go ahead and pause the video and grab it now. Otherwise, let's go ahead and get started. And if you guys would do me a huge favor, please don't forget to drop a like on the video if you enjoy it and comment down below. It really helps out the channel and helps this information reach more and more people. I have my tea in hand, and it's a very fitting mug for the video you're about to see. And I have a great spreadsheet for you guys in this video. Probably took me a couple hours to put this spreadsheet together that you can use as a tool. It's free to download. It's going to be in the description section of the video and the comment section of the video. So make sure to download it. I'll leave links below. This spreadsheet, I think it's going to give you a way to not only better understand taxes, as you're about to see and I'm about to explain, but also a way to figure out how much you should be paying in each quarter or each estimate payment due date. This spreadsheet, I've incorporated numerous elements that would impact your tax return in order to help you figure out your estimate payments. There's a couple of things you need to know or be aware about. The first thing that I need to point out on this spreadsheet is about the tax rates. There's a couple different tax rates at play here that you need to be aware of. The first one is you can use, when determining your estimated payments, you can use your marginal tax rate or your effective tax rate, either one. It's totally up to you and your discretion, and I'll explain more about that in just a minute. You also want to know what your capital gain rate is, because if you've seen some of my other tax videos, you'll know that the capital gain rates are different from ordinary income rates, which are marginal tax rates. So marginal tax rates and capital gain rates are two different things. Very important you understand that, which is, you're going to see that come into play in a minute. And the last thing in terms of rates that I really think you need to be aware of is self-employment tax rates. So if you have a business such as a farm, if you're a sole proprietor and have let's say a consulting business, or you're a plumber, whatever it may be, you're going to be subject to self-employment tax. Something you're probably already aware of if you're watching this video. The full self-employment tax rate is actually closer to 15.2%. But since you get to deduct half of that amount, your net rate is 7.65%. So it's just something to keep in mind. If you're looking at this and you're like, Mike, I don't know anything about tax rates, where do I find that information? Don't worry, I got you covered. On the second tab down here, I've included the marginal tax rates, and this is based on different filing status. Whether you're single, head of household, married, filing joint, you can find your income range and you'll find your marginal tax rate in there. What about capital gain rates? We got you covered there, so don't worry. I've dropped those rates right here. Anything above this amount will be at the 15% rate, and anything above these amounts, which I think very few people would actually have, would be taxed at 20%, which is the max capital gain rate. The way this would work is you would find what your rate is here and your capital gain rate is, and then you would go back to the first page and you would manually enter those percentages for yourself right here. The self-employment tax, that's going to stay the same, so you don't have to touch that one. But these two, you would want to manually enter what your rates would be, because they might be different for each and every person. Knowing what rate you want to use to calculate your estimates is very important, so that's where it starts. Real quick, guys, before we move forward, let's talk about the marginal rate and the effective rate. Now, I did an entire video on this that explains how it all works, but just let me give you the cliff notes here. Your marginal rate is the highest rate of tax you'll pay on each additional dollar you earned. In this example, 22% is the marginal rate of this taxpayer, because that's what they'll pay on each additional dollar earned based on the income tax bracket they're in. The effective rate is different than this. The effective rate is often lower than the marginal tax rate. And the effective rate means that's the average amount of tax you pay on each dollar you earn. So for example, let me give you a real example. So my wife and I were in the 22% bracket. That's our marginal tax rate. However, our effective rate is lower. Our effective rate is actually 5 or 6% lower than that. So our net tax, the net amount of tax we pay on every dollar we earn, is actually only 15 or 16% when you run the numbers. So that's a choice. Determining which one you want to use is totally up to you. If you would feel more comfortable paying in a little bit more tax just to make sure you're not behind, then I would suggest to you to use the marginal tax rate. But if you want to be more conservative with your cash flow and not so much worried about paying in more than enough, then I would use the effective tax rate. To find out what your effective tax rate is, what you would do is you would take your total tax and divide that by your total taxable income. So look at your prior year return and take your total tax and divide that by your total taxable income. And that will help you determine what your effective tax rate is. Either way you want to do it is totally fine with me. It's whatever you're comfortable with. All right, guys, I know this is probably hard to read, hard to see, but I'm trying to give you a bird's eye view of the spreadsheet. It's going to be a lot easier to see if you just download this and just look at it on screen for yourself. And feel free to pause the video anytime to look at this, because I think it will really help you and help you better understand this. If you already make a living through wages, then it's likely your wages already have tax withholdings on them. You're already having money withheld from your wages. That's completely normal. Where tax estimates really shine, or they really come into play and help you stay out of trouble with the IRS and keep current with your taxes, is on those other forms of income that you might not think about. Let's say you have, which is what this is on the left-hand side. And a lot of this follows their tax forms pretty closely. Because if you look at the tax forms, this income is listed there. And this spreadsheet, even though it's a spreadsheet, does coincide fairly closely with their actual 1040 tax forms. There's taxable interest. There's dividends that might show up in your tax return. Net business income. So I put net because I think that's really important, is to distinguish that. So if you're a sole proprietor, you don't pay taxes on the gross business income. You pay taxes on the net business income after all expenses have been deducted, right? So this is a Schedule C. That's when I say business income, that is the schedule. That's the actual tax form we're referring to here. The next one would be your net farming income, if you have any farming income. If you're a farmer, that's Schedule F. This is what Schedule F looks like on screen if you've never seen it. Some people out there have rental income. If you have, it's your net tax, your tax on your net rental income. That is Schedule E, and this is what the Schedule E looks like this, which I have up currently on screen. And just since we're going with that theme, your wages would appear on your W-2, your taxable interest would appear on a 1099, dividends would appear on a 1099, and so on and so forth. The next item I have here is pensions and IRA distributions. This refers to taxable pensions and taxable IRA distributions. You're like, Mike, what if I have a Roth? If you have a Roth, don't even worry about it, because that money should be coming out tax-free. Then if you might be receiving Social Security. If you do, I have a line here for that. Capital gains, let's talk about that, because who here likes stocks? I know I do. Well, capital gains could be from stock sales or could be from other types of property. It doesn't have to be just stock sales. But I have a line item for capital gains that we're going to be discussing here shortly. The last income item that I would think about for estimates, which is, I don't think most people are going to have this, is prizes. Let's say you win a car. You're at a trade show and you win a $20,000 car or $30,000 car. Well, that would be reportable income, right? It would be. So that's why I have the prizes line there. Take a step back. I know this is a lot to take in, but this is all the different types of income where estimates might come into play. with the exception of wages. Wages is already subject to tax withholdings. So generally speaking, unless your withholdings aren't enough, then you generally do not have to make any estimated payments on your wages unless you have extremely high wages and it's not covering your taxes because your withholdings aren't great enough. Then you might implement the estimates like I was saying. So on the left-hand side of this worksheet, guys, is all the types of income. And on the right-hand side is the tax treatment. This I think is going to really help you better understand taxes. The things that are taxed at an ordinary rate or marginal rate are things like your interest, your wages, whereas you'll find out that some types of dividends, like qualified dividends, they're actually taxed not at marginal tax rates, but capital gain rates, which is lower, which is great. Now, how does that work for business income? Well, for your business income, you're going to have your marginal tax rate plus the self-employment taxes of 7.65%. Your business income, if you're a sole proprietor, it's going to be subject to the marginal tax rate and self-employment taxes. That 7.65% we were discussing up here just a little bit ago. You guys remember that? It's business income is subject to the marginal tax rate and the 7.65%. And the same is true for farming income, which is this line right here. Taxable pension and IRA distributions, that's going to be taxed at your marginal tax rate. Social Security income, if your Social Security is subject to tax, it's going to be taxed at your marginal tax rate. If you have capital gain income, that type of income, when you're figuring that out for your estimated tax payments, if it's short-term capital gains, that's at the marginal tax rate. If you have long-term capital gains, that's taxed at capital gain rates. And I've listed that on this spreadsheet, and this spreadsheet is designed to take that into account. Quick review, guys, before we go further. You're going to be using your marginal rate or your effective rate, which you're going to manually enter right there. You're going to use your expected capital gain rate. These are the types of incomes we just discussed. Over on the right-hand side is the tax treatment, so you know what rates to apply against that type of income. Now let's look at the heart of the spreadsheet and the process we use, or I would like you guys to think through when trying to figure out your estimated tax payments. If you remember from one of my previous videos, there are 4 different estimated tax payment due dates. The first estimated tax payment due date covers the income you receive from January through March. The second estimated tax payment due date is not a full quarter. It only covers the months of April and May, which is why I've highlighted this in purple to distinguish that for you. So really your second quarter estimate is based on this income right here, just from April and May. Your third quarter estimate is based on the income you receive from June through August. And your fourth quarter estimate is based on the income you receive from September all the way through the end of the year. I know. I wish they could just make it 4 even quarters. That would be nice, but they didn't. So that's just how these estimates come into play. So when you're projecting your income, that's what you have to consider. These are the time periods and the months you're thinking about when determining your estimated tax payment. All right, guys, I think we've covered enough now to start going over an example. And eventually we're going to come to the bottom half of the spreadsheet where we determine roughly how much of an estimate payment we should make per quarter or per that particular estimate payment time span. This spreadsheet, I want you guys to think about it as a tool to help you figure out what you might want to pay in. It's not designed to be 100% precise, but it will give you a much better understanding of how this income is taxed and what your total estimated payment amount roughly should be. And just to remind everybody, it's called an estimate payment because it's truly just an estimate. You don't have to be exactly precise, but I think this spreadsheet and knowing this thought process of how this works will help you determine that or help you get your estimate payment amounts a little bit more precise. All right, guys, I just quickly went over this spreadsheet with you and covered some of the different elements of it. Now let's work through an example, and I think it's going to make more sense. And I think you're going to learn the thought process behind this and how you can use this for yourself. This spreadsheet, the way I've designed this, is like I said, it's to help you with forms of income that are not subject to withholdings. Wages are subject to withholdings, so in this example, the wages aren't even on here because we're assuming that your wages already have money withheld on them and you're already covered with that. From a tax perspective, you're good. If, like I said earlier, if your withholdings from your wages aren't enough and you find out that you're owing money every year, and the only thing you have is wages, then yes, by all means, you can use estimated tax payments to remedy that situation. What I'm going to do is, I know there's 4 quarters. I'm just going to walk you through 2 of them, and you're going to see how this works. You're going to see how this calculates. In this example that we're using, guys, let's pretend we have some taxable interest income. We have some dividends going on because we love those sweet dividends. There's no alimony because we haven't got divorced, and it's cheaper to keep him or her. Let's be honest. We have some business income because we have our side hustle going on. And I think people who have a business are somewhat self-employed will really find this information valuable. We don't have any farming income, no rental income, no pensions or IRA distributions, so nothing else. But we do, down here, we have some capital gain income of a total of $5,000. We have, of the $5,000, $1,000 of that is short-term capital gains and $4,000 is long-term capital gains. So let's walk through this first quarter. All right, January through March. How much interest income do we have? Well, if I hold and click and drag, we have a total of $33 roughly in interest. In dividends, we have, now you'll notice here that I have a line for ordinary dividends and qualified dividends. I have several other videos that discuss the differences between the two, but all you need to know is that your ordinary dividends are taxed at your marginal tax rate, and your qualified dividends, if you have qualified dividends, are taxed at capital gain rates. And I've listed that over here so you guys don't forget. Now, this spreadsheet, guys, it's going to add everything up in total for the year. So you can project your income for the whole year for all these different categories. Let's continue with our example now, and I'll show you how this works. So our net business income is what? Our net business income in the first 3 months is a total of $4,500, okay? And then we've already talked about our capital gains of $5,000. Your different income items, these formulas should total correctly. So if I were to, just within this first 3 months, if I drag and click all the way down, I should have $9,683.03, which I do. And so these cells down here are going to add up your total income from all sources up above. And so it's kind of a check figure. So you can, if you just highlight this, and you just want to make sure this amount is the same as this. That way you know your formulas are correct and there's nothing going astray. We don't want that happening. We want to be as precise as possible. So follow me down now to the next portion of this worksheet and I'll show you how this works. So what I've done here, this $5,633, what this means is that this is all the income in here that is subject to marginal tax rates. All the income that is subject to the marginal tax rates, which means it's not subject to capital gain rates or self-employment tax. You're going to see where the self-employment tax comes into play in just a moment. If I double click on this number, you can see the formula of what it's adding up. And you can see all the highlighted cells. That is what it's adding. If you guys find errors in this while you're going, please let me know. I'll be happy to correct them as much as possible. The next line item on our list here is total capital gain income. What do we know that's subject to capital gains? Well, we know that our long-term capital gains from stock sales are subject to capital gain rates treatment, right? But also our qualified dividends are subject to capital gain rate treatment, which is why the total is $4,050. So if I double click on that, here's the $4,000 of long-term capital gains, and here's $50 of qualified dividends. In total now, what should happen is that all of our income that is subject to marginal tax rate plus all of our income that is subject to capital gain rates should equal $9,683.03. And does it? Yes, it does. Because I've played with these formulas for a long time. So luckily it does. All right, so what do we miss? We're missing something here. What about your self-employment tax? I missed it, right? Well, I've covered that right down below. So up above, in this example we're using, we saw that this person had self-employment income in total for the quarter of $4,500. So $4,500 from their business they work as a sole proprietor. Maybe they're a plumber, maybe they're a consultant, whatever. But in total, $4,500. So this first section, guys, of this, it basically segregates out all the types of income and gets them in the correct bucket, whether they're going to be in the marginal tax rate, taxed at the capital gain rate, or taxed at self-employment rates. We've summarized all this income now in the correct buckets. Now let's apply taxes to it and tax rates to it so we can determine what our first quarter estimate payment might look like. So the first thing it does is it's a tax on ordinary income, which is this income right here. And this, what it's doing is it's taking, this line is taking this, the $5,633, and multiplying it by this person's marginal tax rate of 22%. And that's how it arrives at the $1,239.27. So what we're really saying here is that the tax on this income, this $5,600, is going to be $1,239. The next thing this spreadsheet does is now we're going to look at our capital gain income, right? So we know we had $4,050 in capital gains with our qualified dividends included. What this does, guys, is it takes this number and multiplies it up above by our capital gain rate, which in this case, we're saying that's 15%. So 15% of $4,050 generates a net tax of $607.50. The last thing we have to factor in is self-employment tax. Well, we know up above, in this example, we have $4,500 in self-employment income. So what we do is we multiply the $4,500 by the 7.65% up here. So if I double click this on this cell, it takes the $4,500 and multiplies it by 7.65%. Quick review. This is the tax on the income that is subject to marginal tax rates. This is the net tax on the income that is subject to capital gain rates. And this is the net tax on the income that is subject to self-employment tax. If you add up all of that, you're looking at a tax bill in the first quarter of $2,191. If you're trying to determine what your first quarter estimate payment should be, and you want it to be as precise as possible, what I would suggest with this worksheet is that in this example, your payment would be $2,191 for the first quarter. And I've listed the payment due dates right here. I'm not going to go through as much detail on the second quarter estimate, but it's basically the same process. So it's determining how much interest income you have between April and May, because that's this time period of the second quarter estimate. How much self-employment income, which in this case, this person doesn't have a lot of income in the second quarter, so their estimate payment should be much smaller. In the months of April and May, this person didn't make a lot of extra money, so their estimate payment should be much smaller, or they might not even need to make an estimate payment at all unless they choose to do so. But in total, from just the self-employment income and taxable interest, this person only has $222 in income, which is what it summarizes to be right here. And if we look at the spreadsheet right here down in the second half, we see that this is adding up this income correctly. The total income subject to self-employment tax, which is up above, is $200. There's the $200 right there. And this, for the second quarter, it creates a net tax of $48.86. Now, if your estimate's that small, then you might even just decide to hold off and just not make an estimate, the second quarter estimate payment, but make the payment in the third quarter if you choose to do so. Totally up to you guys. Totally up to you. If you guys wanted to, there's a lot of flexibility with tax estimates, guys. So if you wanted to, instead of making 4 payments, you could make 2 larger payments if you wanted to. You could make 1 huge payment early in the year versus making 4 separate estimate payments. It's however you want to do it. The main thing, though, is that you keep track of what additional income you have outside of your wages and make sure tax is being paid on that timely. As I mentioned in the last video that covered estimated tax payments and the rules around them, you might be subject to underpayment penalties if you're not paying in enough taxes throughout the year, which is, to me, that's silly, because why would you want to pay more tax than you need to because of some stupid penalty? So this will help you not only keep current on your taxes, which I think is the most important part, but it'll help you avoid tax penalties as well by giving you a rough idea of how to go about this process. So really, let's back up one last time and do one final review. And the best way you're going to learn this, guys, is if you just study the spreadsheet for yourself. It takes time if you're not an accountant, which most people aren't, it really takes time to digest this information. But I just want you to get in the mindset. This is like a tax planning mindset of how much taxable interest do you expect to receive throughout the year, how much in dividend income do you expect to receive out throughout the year, and in each quarter along the way, how much business income do you expect to receive? Really, you're just forecasting the different types of income you're going to be making throughout the year. You're going to take into account your marginal tax rate and your capital gain rates. From this spreadsheet, I really hope you can see that not all income is taxed the same. And that's a huge, when I learned that as an accountant, that was a switch went off. It's like, wow, that really helps to know that, is that not all of your income is taxed equally. And so you really have to have a better understanding of how each type of income is taxed, I think, in order for you to know roughly what to pay in terms of your estimate payments. So download the spreadsheet, guys. Forecast what you might make in these different income categories, and then make sure these formulas, make sure everything's adding up correctly. These totals right here should equal the totals up here. If they don't, there's a problem. And the total income from all of these should add up also on the right-hand side, which it does. So all of these equal 10,732, and right here this says 10,732. And these I didn't really cover this with you guys, but this takes into account all the totals for the year. You can just double click and you can see the formulas, and this will add up all the different income types for the year. So use this worksheet, guys, not only to help you with figuring out your tax estimates, but from a tax planning standpoint as well. Because all of these income items, they appear on the tax forms themselves. Even though this is a spreadsheet, this very closely coincides with the actual 1040, which is why I've designed it this way. And before I forget, this total column over here adds up all the taxes that are projected based on this person's different forms of income. So in total, they would have made, by the end of the year, they'd have made $2,411 in tax estimates over the 4 quarters. And just FYI, if you live in a state that has income taxes, estimates might apply there as well, but you can use the same approach for that as well. You would probably just want to change the rates for whatever they may be for the state you live in above, and then you could use that for, like for example, I'm in California, so I would change the tax rates here because California has different rates than the marginal federal rates. So that's how you could tweak it for state if you wanted to determine your state estimates. So use it for both. It's totally up to your discretion, guys. All right, guys. Well, that is all the information I have for you, and I know that was so much information. So I'm sorry I threw this all at you at once, but I just needed to. This is something that you really just need to invest the time to learn, and there's not really shortcuts to it. You just have to invest the time to start to understand this stuff, and that's why this video went long. So thank you for sticking with me. It means a lot to me. If you liked the video, make sure you drop a like today. Please be sure to share this with a friend, especially somebody who has their own business, who has other forms of income, who might be subject to estimated tax payments. And if they don't know how this works and maybe what to pay, I think this worksheet in this video will really help them. And if you're new to Money in Life TV, be sure to subscribe down below by hitting that red subscribe button. And if you hit that bell notification icon, it's gonna notify you every time I upload a new video. Here on Money in Life TV, we make videos to help you become fiscally fit, as we teach finances, investing, taxes, and more on a regular basis. With that being said, I love you all. I look forward to seeing you down in the comment section and reading everything you have to say, including your questions. So I will see you there. And if you want to see more videos on estimated tax payments, just let me know. If there's something that I didn't cover here today that you would want to learn more about, just leave those questions and comments down below. All right, guys, it's been an honor. It's been a pleasure, as always, to serve you and to make these videos for you. I will see you in the next one. Live life uncaged.